Let's talk about interest rates. Those little numbers that have a huge impact on your everyday life, whether you realize it or not. You might think interest rates are just something for economists or bankers to worry about, but the truth is, they matter to you and your family every single day. Interest rates shape your savings, your debts, your mortgage payments, and even the cost of your next car or home. They're woven into the fabric of your financial life, touching almost every decision you make with money. This isn't just for bankers, it's for everyone who uses money. Students, parents, retirees, business owners, and anyone in between. Think of interest rates as a hidden force, quietly influencing your financial journey. Sometimes they can be your best friend, helping your savings grow. Other times, they can be a silent enemy, making your debts more expensive. When you get a good rate on your savings account, your money works harder for you, growing faster over time and giving you more financial freedom. But when you borrow, whether it's a credit card, a car loan, or a mortgage, high interest rates mean you end up paying much more in the long run. Understanding how interest rates work puts you in the driver's seat. It's like knowing the rules of a game. Once you know how to play, you can make smarter moves and avoid costly mistakes. With this knowledge, you can make better choices about where to save, when to borrow, and how to manage your money for the future you want. You don't need to be a financial expert or a math whiz. Just understanding the basics of interest rates can make a world of difference. Even a little bit of knowledge can save you hundreds or even thousands of dollars over your lifetime. Money you can use for your dreams, your family, or your future. In this series, we'll break it all down for you. No confusing jargon, no complicated math, just clear and simple explanations. We'll show you exactly how interest rates affect your bank accounts, your credit cards, your loans, and even your everyday spending. Most importantly, you'll learn practical tips to make interest rates work for you, not against you, so you can keep more of your hard-earned money. Are you ready to take control of your financial future? Let's get started together. Your wallet and your future self will thank you for it. Remember, interest rates aren't just numbers. They're the rules of the money game, shaping your financial opportunities every day. If you ignore them, you're playing blind, risking your hard-earned money without even knowing it. But if you pay attention and learn how to use them, you can win, building wealth, reducing debt, and reaching your goals faster. So let's make interest rates your ally, not your enemy. Stick with me, and I'll show you how to turn this powerful force to your advantage. So, what is an interest rate? You've probably heard the term countless times, on the news, from your bank, or even in everyday conversations about loans and savings. But what does it really mean, and why does it matter so much to your financial life? Simply put, an interest rate is the cost of borrowing money, or the reward you get for saving it. It's the price tag attached to using someone else's cash, or the bonus you receive for letting a bank use yours for a while. Interest rates are always shown as a percentage. This percentage tells you how much extra you'll pay on top of what you borrow, or how much extra you'll earn on what you save. It's like a fee for borrowing, or a thank you for saving. Imagine you lend your mate a tenner and ask for 11 back next week. That extra pound? That's interest. It's a simple example, but it's the same principle banks use, just with much bigger numbers. Banks and lenders do this on a massive scale. When you borrow from them, they charge you interest. When you save with them, they pay you interest. It's how they make money and how you can make your money work for you. The actual rate you see can change over time. It goes up or down, often influenced by the Bank of England's base rate, which acts like a benchmark for all other rates in the country. When the base rate rises, borrowing usually gets more expensive, and saving becomes more rewarding. Not all interest rates are created equal. Different financial products, like loans, credit cards, and savings accounts, each have their own rates. Some are high, some are low, and it pays to know the difference. For example, a savings account might pay you 2% interest each year. That means for every £100 you save, you'll earn £2 in interest over a year. On the flip side, a credit card might charge you 20% interest on what you owe. That's a big difference, and it can add up fast if you're not careful. That's why it's so important to always check the interest rate before you borrow or save. It can make a huge difference to your finances over time. That little percentage sign might seem small, but it holds a lot of power over your money. It can work for you or against you, depending on how you use it. The interest rate tells you exactly how much extra you'll pay when you borrow, or how much you'll earn when you save. It's a key number to understand before making any financial decision. Comparing interest rates is the secret to finding the best deals, whether you're looking at savings accounts, personal loans, or even mortgages for your home. Don't just assume you're getting a good deal. Always check the number, read the fine print, and make sure you know exactly what you're signing up for. Understanding how interest rates work is your first step to making smarter, more confident money choices. It's a skill that will help you for life. The interest rate you get can dictate how quickly your savings grow or how fast your debts can spiral out of control. It's the difference between building wealth and falling behind. So remember, it's a small detail with a big impact. Know your interest rate, use it wisely, and you'll be in control of your financial future. Here's the good side. Interest rates can be your best friend when you're saving. When you put your money into a savings account, you're not just letting it sit there. You're actually putting your cash to work, and the bank rewards you for it. Put money in a savings account, and the bank pays you interest for letting them use your cash. It's like a thank you for trusting them with your money. And the more you save, the more you stand to gain. The higher the rate, the more you earn. Simple. Even a small difference in interest rates can add up to a lot over time, so it's worth paying attention to what your bank is offering. For example, £1,000 at 1% earns you £10 a year. At 5%, it's £50. That's 5 times as much, just by choosing a better rate. That's a big difference for doing nothing extra. Your money is working for you, quietly growing in the background while you go about your day. Now let's talk compound interest. This is where things get really exciting. With compound interest, you earn interest not just on your original savings, but also on the interest you've already earned. Over time, this snowball effect can make your savings grow much faster than you might expect. The longer you save, the faster your money grows. It's like planting a tree. The more time you give it, the bigger and stronger it becomes. High rates mean your savings work harder for you, even while you sleep. Your money never takes a break, and every day, it's earning a little bit more. But don't just leave your cash in a low-rate account. If you do, you're missing out on free money that could be yours. Shop around for the best deals, easy access, fixed rate, ISAs. There are lots of options out there, so take a little time to compare and find what works best for you. Make your money grow as much as possible. Every extra bit of interest helps your savings reach new heights. Savvy savers chase the best rates. Don't settle for less. Be proactive and make sure your money is always working its hardest for you. Let your money do the heavy lifting so you can focus on living your life while your savings quietly grow in the background. Now the flip side, borrowing. When you borrow, you pay back the loan plus interest. High rates make borrowing expensive. Credit cards can charge 20% or more. Borrow £1,000 on a high-rate card, pay only minimums, and you could owe hundreds extra. Mortgages are even bigger. A small rate change can mean thousands more over the years. That's why you want the lowest rate possible when borrowing. Compare offers. Don't just grab the first one. The lower the rate, the less you pay overall. More of your money stays with you, not the lender. High rates can trap you in debt. Be smart. Always look for the cheapest way to borrow. Every percentage point counts. Don't let interest eat your future. Let's see the impact with real numbers. Save £2,000 at 5% AER, and after a year you'll have £2,100, £100 in interest. At 1% AER, you'd only get £20. That's an £80 difference, just by picking a better account. Now, borrowing a £5,000 loan over 3 years at 7% APR costs about £550 in interest. At 15% APR, it's closer to £1,250, £700 more. On a mortgage, a 1% difference can mean tens of thousands over 25 years. Small rate changes add up, fast. Always do the maths or use an online calculator. Don't just look at monthly payments, check the total cost. Every percentage point is real money. Treat it with respect. Interest rates move. They go up, they go down. The Bank of England's base rate sets the tone, and other rates follow. When rates rise, savers earn more, but borrowers pay more. When rates fall, borrowing gets cheaper, but savings grow slower. These changes ripple through the whole economy. Higher rates can slow spending, lower rates can boost it. You're part of this cycle, so keep an eye on trends. Plan your finances around rate changes. Rates aren't set in stone. Stay alert, and you'll stay ahead. Adjust your strategy as rates shift. Let's get practical. How do you make rates work for you? For savings, hunt for the best deals, use comparison sites, and don't be loyal to poor rates. Move your money if you find better offers. Use ISAs for tax-free interest, and consider fixed-rate bonds for higher returns. Be proactive. Don't let your savings stagnate. For borrowing, borrow as little as possible, pay it back fast. Overpay debts if you can. Small extra payments save big on interest. Consider 0% balance transfer cards to cut credit card costs. Shop around for loans and mortgages, compare APRs, check your credit score. Speak to a broker for mortgages. They can find hidden deals. Always watch for hidden fees. Discipline and smart choices save you a fortune. Make your money work for you, not the other way around. Every step counts. Too many people don't know their interest rates. That's like driving blind. Know what your savings earn and what your debts cost. Check your statements or log in online. If your savings rate isn't competitive, switch. Banks often give better rates to new customers. Don't be too loyal. For debts, list out your APRs and focus on paying off the most expensive first. This avalanche method saves you the most. If you can't find your rate, ask your bank. Knowing your rates is the first step to control. Make it a habit, check at least once a year or when rates change. Take charge of your money. Don't let ignorance cost you. There you have it, interest rates decoded. They can help your savings grow or make borrowing expensive. The key is understanding and using them to your advantage. Small changes in how you manage your money can add up to big gains. Check your rates, make a plan, and act. Don't let inertia cost you money. Interest rates will change, and so will your options. Keep learning, keep checking, keep making smart decisions. Your future self will thank you. Take control of your money. Don't let it control you. Get saving, get switching, get savvy.